Good evening, guys. Hope everybody's doing well. It's November 15th. Today is Wednesday. It's about 3 o'clock or so Pacific time. And markets were mostly flat today. They started out very well. Look at the S&P 500, actually up for the day. Did a very good climb all the way about roughly about 100 points or so, and then dropped and ended up mixed to lower, but still ended up positive on the day, about 9 points. It's a very small percentage, literally negligible. Same for the S&P 500 and same for the Dow Jones. If you look at the S&P 500, down up about 7 points, or 0.1%, and the Dow Jones Industrial Average also up very, very slightly, 163 points, 0.4%, a little bit better than before. One of the things that is interesting about the QQQ, and this is expected given that we've had so many consistent days of so many consistent up days. Look at this. This week, last 2 weeks has been solid. This is the first, after a little bit of a break here, this is the first week, actually, this is the first day in a couple of weeks that has taken a little bit of a breather. I suspect it's going to take a little bit more of a breather because the fact that you actually have a lot of resistance in this zone in the QQQ, or specifically, let's look at the overall NASDAQ index. It's reaching the point where there's going to be a little bit more resistance in the channel, still within the channel. That's a good sign. It's broken through a couple of resistances, but it's still meeting this resistance over here at the 14,103 time frame, 14,105, what 14,100, let's put it that. And it's probably going to take a little bit of a breakdown to maybe, hopefully not as bad as it was before, maybe just the low 1400s or maybe very high 13,900s or so, and then should march back up to the 14,400 range. One of the stocks that came up on the radar is Expedia. Expedia, as you know, is an online travel agent. So they book hotels, cars, flights, etc. Stock has been mostly mixed, but let's look at what is the reason why it showed up on the scanner. So we always start with the fundamentals and the financials first. On an annualized basis, the company has gone from roughly about 15 billion in revenue and grown. This is not a significant amount of growth, but remember, 15 billion for an OTA in terms of, oh, I'm sorry, this is assets. Let's go to the income statement. 8.7 billion in revenue to 11 billion. That's roughly about 25-30% growth. But it's gone through a tough period during 2017 to 2020. This was during COVID. And then phenomenal growth in 2021, moderate growth in 2022. 2023 is the growth is slowed even further, primarily because after the revenge travel, is what a lot of people called it, it's slowing down quite a bit. Gross margins are very strong in the 80% range. And then if you look at the net margins, they are close to about the 5% range. Not bad. If you look at it on a quarterly basis, 3 billion. So it's gone from mid-teens growth and consistently been slowing down. It's not bad. This is not a bad growth. 8% higher than what it was before. Again, about 80%, 90% gross margins, very good gross margins, and end margins in the 5% range, which is healthy. I don't see anything wrong with it so far. From a balance sheet perspective, $22 billion in total assets and cash, and roughly about $6 billion in debt. That's also not bad. It's manageable debt, I think, to a certain extent, given that they have enough assets. Of course, you've got to check and make sure that they don't have assets that are intangible assets. Most of these are actual assets, right? In terms of the valuation, expected for an OTA, but it's surprising given how good their margins are. 80% gross margins, 10% net margins, very strong margins. These are good numbers for an OTA. Growth has slowed to the more low single digits, so this is not bad growth. But if you look at the valuation with relative to the price earnings and how quickly the profit has been growing, look back at the income statement on a quarterly basis. Their net income has been negative for most of the 2022 frame, did a very strong one here. The year-over-year comparison has been tough. That's probably the reason why they took a little bit of a break. I don't see any red flags right now. So far, it seems okay. Let's go to the technical analysis portion. So on a scale of 1 to 10, I'd probably give it about a 6, not a 7, not an 8, not a 9, but still good, strong earnings. I'm going to remove all of my previous drawings just to start fresh. I always start on a monthly chart, just to get a little bit of a better sense. This is what we call stage 1, consolidation period, accumulation period, and rapid acceleration, another consolidation period, and then deceleration or distribution period. And then very good up movement again in the stage 2, consolidation periods, stage 4 distribution, and now consolidation. This is what I would mostly call a consolidation period. It's a big range, but still a consolidation period. And now it's broken out of that consolidation format. That's one of the reasons why it's gone into a new area. This could be the new high, 135. If it hits that, this is off to the races. So keep that in mind. It's right now just broken out of a consolidation area. It's been up and down here, as you can see, and now trying to break out of that consolidation area. Again, on the weekly chart, you can see it's had a multiple touch, double top, actually triple top formation. No, just a double top formation. Probably moved out a little bit more. If it goes out of this zone, let's draw that as a resistance area for us to be able to watch. If it goes out, which I suspect it could, given that it tried 134 today on the high on the day and came down. So the candle looks good, but it is trying to move out of this zone. This is an early sign of a breakout. Again, travel, usually the thing to keep in mind on a macroeconomic perspective is this might slow down pretty dramatically. If you look at what the travel sector has been seeing, some of the stocks that are doing very well, Booking and Expedia are doing well. Airbnb seems to be good, but not great. The airlines themselves are struggling quite a bit. Hotels are doing okay. Both Hilton had good earnings. If you look at the travel sector specifically, I would probably not pick Expedia. I pick Booking over Expedia. Just to give you comps wise and growth, Booking is just a much more solid company. But this is coming out of a breakout. So purely from a technical analysis standpoint, this is probably a good stock to be able to watch. If it comes in this range, watch for two things to happen. It might consolidate a little bit here, but I'm looking for a breakout over 135. And then this has got a very strong movement to 148 after that. That's a very good 1 week, maybe 2 week kind of a trade. Where does the support look like on the short-term basis? Definitely it looks over here. But even then, before that, it has to break down from the 116 range, which probably wouldn't, I suspect. This is at least one. So look at the number of touches in the 116 range. You could probably move it up a little bit to 125, but 116 is a safe range. So you want to watch for what would I do in terms of playing for it. Let's go to the daily chart and see how we would play this. It's broken out of a range, and that is a good sign. If you look at the last 1 year, it is broken out. So it's a new high on the year. Look at this. It's in a 52-week high range. So this is going to go higher. Definitely going to go higher, whether it'll consolidate and go higher. And if you look at the personality of the stock, it does this thing where it starts to go up pretty significantly once it gets a little bit of movement. It isn't one of those stocks that messes around a little bit. It's gone through a very good stage for decline, and it respected the channel very, very well. Look at this. This is good respect for the channel, being consistent for most parts, staying within the channel and moving down. Broke out of the channel, very good earnings. That's probably the reason why. Strong earnings, 9% surprise on the earnings side. It reported $5.41 versus $4.90 expected. And then 3.85 billion was the estimate, 3.92. So I would read just to give you a little bit of context, the best way to do this is go to bard.google.com. You could use any other AI solution, but OpenAI is not as good. ChatGPT is not as good for this particular thing. Check the transcripts, and the prompt you want to use is OpenAI or ChatGPT or Bard. Tell me the summary of the conference call earnings of Expedia. Find out if they're actually projecting to go up. If that is the case, which I did, and I think they're projecting actually that they have stability in their earnings going forward, I would expect this to move to the 130. I would definitely see it going to the 135 before it gets a resistance. It might move a little bit down from here over the next couple of days, consolidate like this pattern, or consolidate more like this pattern a little bit, and then make its move up. So I definitely like Expedia, but I would watch this closely to be able to make a trade on the move up. Thank you very much for watching. Please subscribe to the channel. I appreciate it.